Good morning, everybody. Thank you very much for joining us today on this webinar on expanding to the UAE, opportunities and threats for your business setup. As the title suggests, we'll explore the opportunities that the UAE offers for international companies to set up there, as well as the challenges that companies and individuals can face when relocating. As a friendly reminder, this session is being recorded so that we can share it with you later. And throughout the duration of the session, you can submit your questions via the Q&A function, and they will be answered by the speakers following their presentation. Well, to provide some context, in 2023, there were already more than 300,000 foreign companies established in the UAE. In 2024, the Dubai Department of Economy issued around 200,000 new licenses, making the UAE a leading country in foreign direct investment. The sectors with the largest foreign investment are technology, with a particular focus on AI, financial services, and renewable energy. WellTax, based in London and Dubai, helps foreign companies manage their financial and tax elements of setting up an office in the country. WellTax is a boutique accountancy, advisory, and tax firm. Its team of professionals specializes in providing tailored solutions for businesses and also for individuals navigating international tax and regulatory environments. They are committed to supporting entrepreneurs, SMEs, and high net worth individuals by streamlining processes and empowering them to thrive. We are organizing this webinar in collaboration with our counterparts in the Emirates, the Spanish Business Council of the UAE. So without further ado, I'll now hand over to its Managing Director, Marta Fernández de Alarcón.
Thank you. Thank you. Good morning, everyone. Thank you for joining us today. I'm glad to collaborate in today's webinar with the Spanish Chamber of Commerce in UK. And also with one of our most valuable and active members within the Spanish Business Council, WellTax. So my name is Marta Fernández de Alarcón. I am the Secretary General of the Spanish Business Council, and I want to welcome all of you to this webinar about an interesting and relevant topic, exploring the opportunities and key tax considerations for doing businesses in the UAE. Our panel of experts today will provide essential guidance on the UAE's dynamic business landscape, whether if you are starting a new venture or expanding an existing operation. This session will cover critical aspects of business setup, corporate tax fundamentals, and also cross-border tax considerations, helping to make informed decisions for your expansion strategy. I want to say thank you for your support today, WellTax, and for your esteemed collaboration always. It is very valuable and much appreciated for both as Chamber of Commerce. I am pleased to present today the panelists from WellTax, which are Lorenzo Tosonotti, a founding partner at WellTax with over 10 years of expertise in wealth management. He has also advised single and multifamily offices worldwide on asset management and real estate investments across the UK, UAE, and other global markets. Luca Marin, business consultant specializing in SMAs and international expansion. A founder of WellTax, he has assisted businesses in expanding to the UK, US, and New Zealand, and with expertise in financial reporting, internal control system, and tax structuring. And Thomas Roncoroni, a business consultant with experience in both SMAs and multinational corporations. Having lived in the UAE for over 5 years, he possesses deep knowledge of the local market and business environment. So I don't want to waste time to our speakers today. I give the floor to Lorenzo. And also at the end of the webinar, we will explore a Q&A time. So feel free to, after the webinar, ask whatever you need. So Lorenzo, you can start now. Thank you.
Thank you very much, Marta and Miriam. It's a pleasure to be here today to this webinar organized and sponsored by the Spanish Chamber of Commerce in the UK and the Spanish Business Council in the UAE. And welcome to everybody. Good morning for those in London or in the UK, and good afternoon for those in the UAE. As Marta and Miriam already explained, we are going to talk today about business expansion in the UAE, giving some numbers at the beginning, some overview about the country, and then explaining more details on business setup, but also international tax aspects. First of all, I would like to start with a quick disclaimer. Our interpretation, what we are going to discuss today, it's our interpretation, and it's not an official interpretation, which is only allowed by the Minister of Finance of the UAE or the Federal Tax Authority. So in case you are looking for legal or tax advice, our suggestion is to speak with a professional and don't base your judgment on what we are going to discuss today. Miriam and Marta already gave a brief overview of our company, so I don't want to spend too much time on this. I only like to add the fact that we are chartered accountants in the UK, and we are a registered tax agent with FTA in the United Arab Emirates, and our offices are in central London and in Dubai. Okay, so now I would like to give a brief overview of what we are going to discuss today. I will start by explaining what UAE is for those who are not practical with this country. Then Thomas will give us practical steps or to do a proper business setup in the United Arab Emirates, and we'll finish with Luca, who is going to talk about permanent establishment. He will also discuss the differences between subsidiaries, branches, and representative offices, and then he will conclude by giving some hints about cross-border and international tax aspects. Okay, so what is UAE? UAE is a country in the Middle East, which was founded more than 53 years ago, and is composed by 7 emirates, of which the 2 most famous are probably Abu Dhabi and Dubai. However, other emirates are gaining importance in the last few years, in particular Ras Al Khaimah, for example, which will have the first casino in the region by 2027. Also, UAE is a country with about 12 million population, of which only 1.2, 1.3 million are Emiratis, while all the others are people coming from different countries. For example, we have more than 200,000 British nationals living in the UAE, and based according to numbers from 2024, there are more than 7,000 Spanish nationals living in the UAE in 2024. In terms of GDP of the country, in 2024, it was 488 billion euros, of which, and this could sound quite surprising, but of which 75% is deriving from non-oil sector. So this is very important. So 75% of GDP is non-oil based. I believe one of the reasons why UAE is increasing its importance dramatically in the last few years is also given by the fact that the country has direct access to 3/3 of the world's population in less than 8 hours flight. And nonetheless, the country, Dubai, is building a new airport, Al Maktoum. I mean, the airport is already in existence, but it's expanding the airport, which will be able to host 150 million passengers by 2032, with a plan of 260 million by 2040, in comparison to the current airport international, which hosted about 100 million passengers last year. Also, last but not least, very important to mention the fact that it's a very safe country, with Abu Dhabi ranking first as the safest city in the world and Dubai 4th. And last point, the country saw an important inflow net positive inflow of millionaires in 2024, with about 6,700 people, millionaires, relocating to the country. Just to give you a quick comparison, United States of America had a positive inflow of 3,600 in the same year. Italy, a positive inflow of 2,200. Then, of course, when we discuss the reason why, what are the advantages for investors, many of you may already know that there is still 0% personal income tax in the country, while corporate tax is at 9% only for profits above a threshold of 375,000 dirhams, which is approximately 80,000 GBP pounds. Thomas will discuss these in better details later on. Also, there is foreign ownership allowed for majority of the sectors nowadays, and the country is ranked in the 16th position in the ease of doing business index, while, for example, we have Spain ranking in the 30th position and the United Kingdom in the 8th position, Italy 58th position. Okay, so why we have decided to do this webinar with the Spanish Business Council in the UAE and Spanish Chamber of Commerce in the UK, because we believe there is a very strong relationship and partnership between Spain and the United Arab Emirates, and we can see that the exports from Spain to UAE are increasing, and there is like $400 million increase, for example, in comparison for 2024 in comparison to 2021. Also, as I mentioned, there are more than 7,000 Spanish nationals living in the country, with over 200 Spanish companies operating in this country. So at this point, I would like to pass the word to Thomas, who will explain in further details all the practical steps to set up a business in the UAE. Thank you very much.
Thank you very much. Thank you very much, Lorenzo. Good morning, everyone, or good afternoon, depending on where you are. I'm going to dive a little bit further into the aspects that should be considered when setting up or expanding your business into the UAE. So initially, it's important to understand the possible geographical forms and legal forms in the UAE. So as a general framework, in the UAE, there are as options of geographical form, you have mainland, free zone, or offshore. I'm going to go deeper into each of them right away. But now I would like to focus on the legal form. As you can see, there's many of them to choose from. For example, the limited liability company or LLC has been quite popular in the last few years, especially since 2021, when there was a change in the law that stated that from that moment on, there was no need for a local partner to be part of the shareholding structure of a business. So basically 100% ownership of foreign shareholders was allowed. So this increased a lot the popularity of the LLCs. As well, sole proprietorship or civil company are as well quite popular, but it's worth considering that the liability is full. So in case of any bad situation undergoing, then the owner would have full responsibility and full liability. And there's, as you can see, many other legal forms, many of which we'll discuss as well later on, such as branch or representative office, which Luca will dive deeper into. So as I was mentioning, there are in total more than 60 business jurisdictions in the UAE. This is composed by 7 mainland jurisdictions, so 1 per each of the Emirates of the UAE. We'll go into more detail of what are the benefits of mainland jurisdictions. There are around 50 free zone jurisdictions as well. So there's many to consider when setting up a company in UAE, which is why it's very important to seek the right advice, especially very early on, as making a mistake in this stage can represent a very big headache and problem in the future if you didn't choose the right legal form and entity and jurisdiction. So I strongly recommend this. And there are 3 offshore jurisdictions that we will discuss in detail as well. So for mainland, many of the reasons why companies choose mainland to set up their business is when they provide a B2C business. So basically, in order to serve direct clients in the UAE, that is done through a physical presence, for example, a store, a restaurant, or a gym, just to name a few. Mainland is the option, and it basically entitles you to have a physical presence in the UAE. At the same time, you're allowed to do legal businesses with the governments, which is not allowed in most of the free zones. And at the same time, there is more flexibility in terms of visa, so you will have more visa quotas for hiring employees. For the type of licenses that are allowed and the categories, there are many, but the most important ones are, for example, commercial license, such as selling goods or distributing goods, industrial license, any type of manufacturing or industrial activity, professional licenses like consulting, accounting, for example, which is our case, professional activities, and tourism as well, so any tourism activities or hospitality. So why would a company choose free zone instead of mainland? So some of the benefits of free zone jurisdictions are, for example, having, in the case, we'll dive more deeper into this, but free zone companies can, in some cases, be qualifying free zone persons and benefit from 0% corporate tax if they fall into all of the criteria. We will go deeper into that as well. But at the same time, they can have easy business between other free zone companies. They can do business in the UAE with other free zone companies and do business internationally as well. And there's more flexibility in the legal framework as well. So that's for the type of licenses that are available for free zones. As you can see, there's many of them as well. Industrial as well, or commercial, different type of professional licenses for services like marketing, for example, or consulting, logistics as well, media license, and basically from all the jurisdictions, there are many jurisdictions in the free zones that offer benefits for different type of licenses. So you would have, for example, one free zone is Dubai Design District, especially offering benefits for the design industry companies. And as well, you have Media City, and you have many different free zones specialized in different industries and categories of business. To compare both mainland and free zone, and to name a few key characteristics, as I said, in mainland, there's more flexibility for visa quota, but it's important to understand that from recent, there is a new law that mandates employment of Emiratis within the structure of employees of the company. So as a company in mainland overpasses 20 employees, they are obliged to hire an Emirati. This is not mandatory in the case that they have less than 20 employees. And in the case of free zone companies, they do not have to follow Emiratization laws. For wage protection system, this is a framework that keeps track of wages and has a very rigorous framework in place. This is mandatory for mainland entities, but is not imposed in most of the free zone companies. So it's worth considering. And at the same time, mainland companies have a duty of 5% for imports and for duty, but in the case of free zone, they do not. So this is another benefit to consider. In the case of offshore, so why would a company decide to operate in offshore? Well, in the case that they're interested in doing business internationally, but not in the UAE, this is the case for offshore. I'm going to do a between brackets a clarification here. In the case of RAK ICC, they have a partnership with RAKES, which is the free zone of Ras Al Khaimah, in which they allow you to open an offshore company and as well open a separate company linked to this first offshore, which is addressed in RAKES in the free zone and does allow you to operate in the UAE. This is a dual option, but otherwise any offshore such as only RAK ICC or Ajman free zone or Jafsa, which is the free zone of Jebel Ali, in these offshore jurisdictions, you cannot do business in the UAE. You cannot as well have any visa quotas, and you will have to appoint an agent for all the process is done with the jurisdiction. But it's a very interesting option if you are planning, for example, on holding properties, either internationally or in the UAE. So it's a very interesting option to consider for those interested in doing so, or doing business internationally as well. So I want to do a short overview on corporate tax, some possible reliefs, and the qualifying free zone person that I mentioned earlier that benefits from 0% corporate tax. But it will be just a brief overview. So I strongly encourage anyone interested in diving deeper into this, as it is one of our expertise, to consult us to have a more deeper understanding on it. But as an overview, natural persons or juridical persons in the UAE, they have a 9% corporate tax imposition on their taxable income on top of 375,000 dirhams from all of their activities. In the case of free zone persons that are considered qualifying free zone persons, they will benefit on a 0% corporate tax on their qualifying income, and they will pay 9% as normal on their non-qualifying income. Now, what is the case of non-residents? How is it applied? Well, it will depend on their permanent establishment on the UAE or in their nexus in the UAE. If they have such, then they will have to follow the framework of the 9% and pay taxes on their taxable income exceeding 375,000. But if they don't have a nexus or a permanent establishment in the UAE, they will not have any type of tax obligations. So qualifying free zone persons, in order for them to benefit on a 0% corporate tax, they need to follow all of these conditions. They need to possess an adequate substance in the free zone. This is intended as, for example, having employees, having an office, and having key decisions of the business being done in the UAE. This is a specific analysis that has to be done, for which Luca can give more details later on. They need to have income, being qualified income from their activities. So from business with other free zone persons or specific qualifying activities. Their financials must be audited. They need to follow transfer pricing regulations, which we will go into more detail later on as well, and keep all of the documentation for the transfer pricing. It's important that they shouldn't have opted for the 9% corporate tax earlier, which is always an option for businesses, and they should meet the minimis threshold. Now, companies or natural persons may recur to certain reliefs that are very beneficial in the corporate tax analysis. So let's take, for example, the natural person relief. This is the case of individuals doing business activities in the UAE who do not need to register for corporate tax if they do not carry any business activity, or if they do carry a business activity, but it doesn't surpass 1 million dirhams annually. So you may be wondering, what is a business activity? Well, wages are not considered business activity. As we mentioned, personal income tax is not taxed in the UAE. Income from any real estate investment as a natural person is not business activity as well, or any type of personal investment. On the other side, the business relief is the case of natural persons or juridical persons who are executing a business activity with a revenue below 3 million dirhams per year on that specific year and all prior years as well. So in this case, they can opt for the small business relief and benefit from a 0% corporate tax. In this case, they do not need to follow any transfer pricing, but they must follow the arm's length principle. It's important to know that they will not be eligible for this relief should they be a qualifying free zone person, or if they are part of a multinational group with a global revenue of over 3.15 billion dirhams. A very short overview on VAT. As you may know, there is a VAT of 5% in the UAE. So basically businesses that overpassed 375,000 dirhams in the last 12 months. So it's important to note this is not a 1 year analysis, but every time 12 years to the past must be considered for their billing and at the same time for all of their imports as well. So both of them will be considered on this threshold. If they surpass 375,000, they are obliged to register for VAT. And in case they haven't surpassed 375, but they have overpassed 187,500 dirhams, it's an option for any business to register for VAT. It's important to note as well that the declaration of VAT is done in a quarter basis. As of now, I hope everything I have said has been clear. Otherwise, I invite you to ask us if there are any doubts. And I will pass the word to my colleague Luca, who will go deeper into permanent establishment. Thank you.
Great. Good morning, all. Good afternoon. And thank you, Thomas, for the insightful overview. Now I'll be covering a crucial topic that impacts many international businesses operating the UAE, the concept of permanent establishment and the tax implication for non-resident entities. The UAE has adopted OECD principle to define when a non-resident entity might be considered to have a taxable presence in the Emirates. And as you will see, this goes well beyond simply opening a branch or a physical office. One key concept introduced is the place of effective management. This refers to where the key commercial and strategic decisions are actually made. So if a company is effectively managed and controlled from the UAE, even without a legal entity there, it may become taxable in the UAE as a non-resident, taxable person with a permanent establishment there. Under the new regime, a non-resident entity can be considered to have a permanent establishment in the UAE if any of the three conditions is met. If we move to the next slide, Thomas, and the three conditions, for example, are a fixed or permanent place of business in the UAE. This is basically the traditional test. And the second test is the non-resident habitually exercises authority through someone in the UAE. Or the last test is whether there is a nexus that connects the non-resident to the UAE. So the definition of nexus basically is a immovable property. It could be a building, it could be land, or also a piece of machinery attached to a building, for example. Each of these scenarios can potentially trigger a tax obligation. And now we're gonna break them down a bit more. The concept of PEM, so basically is the place of effective management, is closely linked to actual control. It's not just about where the company is registered, but where the day-to-day management decisions are being taken. If employees working the way are directly contributing to revenue generation and they are being direct or managed by the overseas parent company, this could trigger a P status. It's especially important to clarify with the employees their role and responsibilities to assess whether their activity constitutes a taxable presence in the way under the OECD guidelines. If we move on, basically a fixed place of business can be a number of things. A formal branch or an office, but also a temporary project site, a field office, a warehouse, or even an employee home office. The key is that business activity is being conducted there, even partially. The way follows again the OECD principle, where it says a fixed place of business through which the business of an enterprise is wholly or partly carried on. So even limited activity, if it's recurring and revenue linked, may qualify. Generally, there are two main types of permanent establishment, as we can see in this slide. Firstly, we have the fixed place of permanent establishment, which we have just described, that is a permanent physical presence used for core business activity. But then we have also another type, which is called dependent agent. This applies when a person in the UAE is regularly concluding or negotiating contract on behalf of a non-resident. For example, it could be an agent, which of course has got the power to negotiate the contract with the client there. And now there are important exclusions to be aware of. For example, independent agents acting in the normal course of business are not considered pay. Also excluded are employees performing non-core activities or auxiliary function, which are being shown here. But the question is exactly what qualifies as preparatory or auxiliary? There are activities that support the businesses, but are not core part of the revenue generation. For example, marketing and promotional work, market research, attending seminar or trade events, or also information gathering. These do not typically trigger a PE as long as they remain limited in scope and aren't part of the company essential operation. But be careful. Once support activities start to resemble sales or negotiation, as we mentioned just a little before, the line gets blurry. The thing is that when we assess that a permanent establishment is established or a non-resident as a way source of income, the next question is, what is taxable? If we take a step back in the way income is considered as state source income in any of the following cases, where is derived from a resident person, where is derived from a non-resident person and the income, whatever paid or accrued, is attributable to its permanent establishment, where it's generally accrued or derived from activities performed there, assets located there, capital invested, and so on. The Federal Tax Authority is also keen to point out that state source income and income attributable to a permanent establishment away are not mutually exclusive, as state source income can be attributable to a pay. The same concept applies to Nexus, as the latter is included in the definition of state source income. At this point, many companies ask, what's the best way to structure our presence in the Emirates? We have three main options. The first one, for example, is the subsidiary, which is a separate legal entity. Then we have a branch, which is legally part of the parent company, but has basically an arm in the Emirates. Otherwise, a representative office, which can generate profit but may perform marketing or liaison activity only. The choice has major implication in terms of tax, liability, required documentation, and scope of activity. Being conscious of time, let's look very quickly at the pros and cons. In this table, basically, we're summarized on each slide pros and cons for each structure. But just to summarize, a subsidiary offers more independence and limited liability, but requires more setup time and documentation. On the other hand, a branch is easier to set up and allows commercial activity, but the parent company is fully liable. Finally, a representative office is cost-effective, but it cannot generate revenue. It's limited to promotion and support function. The right choice, of course, will depend on your long-term strategy, the type of activity, but also how much control or separation you want from the parent company. Lastly, a quick note on the documentation needed. Regardless of the structure you choose, there are several key documents typically required for incorporation, including, as you can see, certificate of incorporation, article of association, and so on. Many of these documents must be attested by the UAE embassy in your home country and later legalized in the UAE. Be aware that requirements may vary slightly depending on the emirate or free zone involved, so always check before the local rule. We will now move to the next chapter of our presentation, where we will deal with a crucial topic, international tax implication and related party transaction. Historically, in the Emirates, transactions between companies of the same group, for example, internal sales, financing, or management services, were arranged rather informally. Often there was no need to justify prices or document the transaction, as these differences were cancelled out by consolidating the group results. However, with the advent of corporate tax and the willingness of the government to align with international standards, the situation has changed radically. From now on, all related party transactions, whether local or international, must be carried on an arm's length principle. That is, they must reflect the prices and the term that would have been arranged by an independent party acting in a similar circumstance. And very importantly, it's not enough to say that these conditions are met. Adequate documentation must be available to justify how prices have been determined, especially if there are tax audit or inspection. This represents a major change in the mindset of many companies, which must now be much more rigorous in how they structure, document, and justify their intragroup transaction. So this is the slide that I just explained, but what is transfer pricing? Transfer pricing refers to the value assigned to goods, services, or intangible assets that are exchanged between related companies located in different tax jurisdictions. So, for example, consider a parent company in Spain purchasing goods from its subsidiary in the United Arab Emirates. The prices that they agree for this transaction is not just an internal number. It has a direct impact on the allocation of profit and therefore on each country tax obligation. An incorrect price can lead to higher or lower tax charges, which can result, of course, in disputes with the local tax authority. To avoid such situation, the OECD has established global guidelines based on the arm's length principle. This means that transactions between related parties should be valued as if they were between independent parties, acting under normal market conditions. Compliance with these rules is not only a legal obligation, but also a key strategy to minimize tax risk and ensure transparency with tax administration. In this slide, we will analyze the method approached by the OECD to determine transfer pricing and how to apply them correctly. Again, this table shows all the methods. However, in practice, the most commonly used method are the cost plus margin method and the transactional net margin method. The first one basically involves taking the cost of production of goods or services and adding to it a reasonable profit margin based on the market condition. It's especially useful, for example, in manufacturing operation or intragroup service provision, where costs are easily identifiable. On the other hand, the transaction net margin method compares the net margin obtained in related party transaction with those obtained by independent companies in similar transaction. It is a very flexible method and one of the most widely accepted by tax authority. It's important to remember that the choice of the method should be based on the available data and the best possible method principle as set out in the OECD guidelines. Now we'll look at how these methods relate directly to documentation and verification obligation. Firstly, we need to bear in mind that the authorities are frequently monitoring companies to ensure that they apply transfer pricing guidelines correctly. This involves reviewing method use, the rationality of the margin applied, and the proper valuation of related party transaction. Then, for example, well-structured documentation not only facilitate compliance with legal requirements, but also protect the company in case of tax audit. In addition, it allows demonstrating that the transaction has been carried out in accordance with the arm's length principle, and the transfer pricing policy are consistent and justified. Having understood this principle, it's important to be aware of the formal obligation to be fulfilled, such as the preparation of the disclosure form. And this form must be prepared and submitted by each taxable person entering into transaction with a related party or a related person, whether domestic or international, whenever certain materiality thresholds are exceeded. We can see here, for example, the form will be mandatory if the aggregate value of all the related party transaction exceeds 40 million dirham, or if within one category the limit exceeds the 4 million dirham. And you can see below the different categories. In the next slide, we can see that the information to be disclosed includes several key elements, such as the details of the related party, the income or expense related to the transaction, the transfer pricing method, and so on. In addition, it's important to note that the form must also be completed if the aggregate value transaction with a related person exceed 500,000 dirham. This applies, for example, to remuneration paid to directors or partners exceeding this amount. Now let's look at it in details. For this payment to be tax deductible, they must meet three fundamental requirements. First, they must respect the arm's length principle. The remuneration must be reasonable compared to what an independent person in a similar position would charge. And it's important to understand that if it's paid above that market value, the excess will not be tax deductible. Second, there must be a real business need. It must be demonstrated that the service provided is necessary for the business by providing evidence such as management report, minutes, or even project documentation. And third, the remuneration must be aligned with the interest of the company, not, of course, personal interest. For example, a bonus linked to sales growth or profitability is deductible if clearly justified. Now that we know what factor influence what is deductible, let's look at what basically are the practical steps that company can take to improve and protect deductibility. The first step is to conduct an industry standard analysis. You need to compare the remuneration offered to the director or partner with the salary range that are common in the market and the sector in which the company operates. Second, you need to maintain clear documentation. It's essential to record qualification, responsibility, and performance of each member of the management. Next, design target-oriented compensation plans, bonuses, incentives, and variable compensation should be clearly linked to measurable results, such as sales growth or even KPIs. And finally, periodic review and adjustment. Market conditions change, and so the remuneration policy must also adapt to remain reasonable and defensible. Now, to close this section, we are going to talk very briefly about another very important issue in the tax system, withholding taxes. Generally, withholding taxes may be applied to any income derived by non-resident, excluding income from permanent establishment. For example, if we look at the double tax treaty between Spain and UAE, we can see that there are two withholding taxes at 5% and 15%. However, it's important to know that recently the UAE has changed his view. And at the moment, basically, there are no withholding taxes on any dividend, royalties, and interest paid to overseas company. And this is, of course, one of the most attractive features of the tax system. And basically, this means that unless such income is linked to a permanent establishment, of course, there is no obligation to withhold any tax or record withholding tax payment. On the other hand, for example, if a company in the Emirates receive an income from an overseas entity, most likely it will have a tax credit. And basically, if an Emirati company receive income from another country and pay tax there, this tax credit can be used to reduce its corporate tax in the Emirates, thus avoiding double taxation. However, there are some important limits. The credit can only be applied against the tax due on that income. So it cannot also apply to other income generated in the way, for example. It cannot exceed the amount of corporate tax that would be payable in the Emirates on that income, as I just mentioned. And if there is a credit left over, it cannot be carried forward to future or past year. And then on the next and last slide, we can see like a very easy example where a company has to pay, for example, 38,250 dirham of corporate tax, and basically as it suffered a 10,000 withholding taxes overseas, it can use this withholding tax to decrease the corporate tax that has to pay in the way. And this is it. This brings us to the end of our presentation. Here you will find the contact details of our two offices in Dubai and London. And in addition, you will also find below the email addresses of Lorenzo, Thomas, and myself, so that you can write to us directly if you like to discuss a specific topic in more detail or request assistance. And now we are fully available to answer any questions that you may have. Thank you very much for your attention.
Thank you, Luca, as well as Lorenzo and Tomas, for sharing your expert knowledge on these essential aspects when planning to set up into the UAE. We will now open the floor to questions. Marta will be reading out loud every question you might have. So we invite you to send any questions you might have through the Q&A function. You can see it just next to the share option. We have some questions already. So Marta, if you want to begin with some of them, I'll give you.
I'm going to start. To start a business in the renewable energy sector, which company structure would be more advantageous in the United Arab Emirates, mainland, prison, or offshore?
This is an interesting question. I believe I don't think we mentioned it before, but there is a free zone, for example, in Abu Dhabi, which is called Masdar City, which is one of the I would say the most important free zones in terms of renewables in the United Arab Emirates, also giving funds to companies which are investing there. For example, there are agreements between Masdar City and the Italian Eni, but I believe there are agreements also between Masdar and Spain's Endesa, if I'm not mistaken, for investing in solar plants in Spain. So yes, to answer the question, I would say Masdar City could definitely be taken into consideration in Abu Dhabi, and in that case, it would be a free zone company.
Thank you. The next one is, what is an appropriate salary in line with UAE guidelines for a director of a consulting company with a turnover of several million euros?
Luca, do you want to microphone?
I am sorry. Again, yeah, very interesting question. And of course, it's not easy to reply. And as mentioned, we need to collect like as much as information as we can, because there are no standard or automatic. There is no standard or automatic figure. The regulation require, of course, remuneration to be reasonable and in line with market condition, and we need to take into account different factors such as the size of the company, the volume of the turnover, the complexity of the operation, and of course the experience and the actual function of the director. Therefore, the right thing is to conduct a specific case analysis, and this analysis should include the industry salary comparison, market research, or benchmarking of similar position, both locally and internationally, of course. So yeah, it's not an easy answer, sadly.
Okay. The next one is, what is the average timeline to set up a single shareholder limited liability company? And what are the timelines for establishing a branch? Maybe in order. The first one, what is the average timeline to set up a single shareholder limited liability company?
I can reply to this one. So since the shareholding is individual, this is an easier setup. So in this case, for a mainland company, it would be somewhere between 2 working weeks, whereas in a free zone, it can be even up to just 1 working week. In the case that the shareholding would be owned by a company, then this would make the process become a little bit longer. And as Luca explained earlier, they would have to present all of the attested documentation, both in the country of origin and attested in the UAE as well.
Okay, thank you. And the next one is, and what are the timelines for establishing a branch of a foreign parent company?
I believe that my second part of the question would apply
Correct.
for this case. Yeah.
It's the same. Okay, what are the main bureaucratic or operational challenges encountered when setting up a company in the UAE?
Tomas, do you want to answer that one as well?
Definitely, yes. So as I mentioned earlier in the presentation, from the first initial stage, there are many aspects to consider. Whereas on the entity, if it's a free zone, if it's a mainland, and which jurisdiction to choose from. And later on, the tax aspect has many regulations to follow as well. So the first advice would be to consider first proper advice from a consultant, and on the tax aspects, following registered FTA tax agents advice as well, because having the right guidance at the beginning can make the future a lot more smoother and avoid heavy situations and fines.
The next one, what are the main RAC ICCs are frequently mentioned jurisdiction in the UAE. What are its main applications, and for which types of activities is it most suitable?
Yes. So RAC ICC, as was mentioned by Thomas is one of the offshore jurisdictions in the UAE, and it's mainly used to own real estate assets. For example, we can see a different scope of use for this kind of setup, but it's definitely interesting for holding companies or as well foundations, which is a new structure which is gaining a lot of popularity in the last few years, especially for inheritance purposes. So yes, I would say it's frequently used to as a structure to buy on real estate assets or also other kind of assets. Of course, this is just a general overview. Then, I mean, we would need to get into the details of the specific needs of the client, since time is what it is.
Thank you, Lorenzo. The next one is the FTA has suspended tax residency certificates for non-UAE nationals intending to use them for Portugal, Spain, and Greece. This means that non-UAE nationals can no longer obtain a TRC to benefit from the double taxation avoidance agreements with these three countries. Do you have any clarification on this, please?
Yeah, so we are aware about this issue, and of course, we are monitoring closely with the FT. And the main issue is because of it's mainly due to the language of the double tax treaty. And of course, the double tax treaty says that basically a country can issue a certificate of tax resident if that taxpayer is paying taxes in that country. But as we know, there's no personal income tax in the way. So at the moment, there is this issue due to the wording, and the FTA suspended the issuance of this tax residency certificate. It's something that we are monitoring very closely, and yeah, if perhaps if Guillermo, I can see you can send us an email and we can look at it more in details and advise you on this. Yeah.
Thank you, Luca. I had another question. I think you've mentioned it briefly just before, but it's regarding the timings. So how long in advance should you start planning your setting up in the UAE? And does it depend on the structure of the company you are planning to set up, or in the area, if it's a free zone or if it's a mainland and so on. And then how long does the process last while you are, I mean, do you need like 2 years, 1 year, 6 months?
I can answer to this one. So how long ago before you should start planning? It's actually depends on case by case. What I can say is that I should dedicate proper timing to understanding the structure before making the decision. So regardless of the time frame, I would recommend getting proper advice, guidance, and understand. There's many aspects because you have the legal aspect of the company you will set up, and then the implications of how the business will start. If you will be moving in, then there are personal implications and so on and so forth on each case if the person has family. So there's many more aspects besides the company formation, but speaking specifically for it, once the decision has been made, there is an entity in place. As I said, for mainland, you can look into a time frame of around 2 weeks for the setup. This is most cases if there is for a more straightforward case. Then there are some situations in which additional approvals are required. So for anyone considering mainland, for example, to open up a restaurant or a store, there are other approvals that you must obtain. To name a few, you have CETA, for example, for cameras inside the venue. And if you are to build, to undergo construction, then of course there are many construction approvals that must be obtained. But on the legal aspect, the license itself would take around 2 weeks, and then for the visa, you can consider as well around 10 days to be in place in an immigration way. For free zone, you can consider 1 working week, and as well around a week for the visa process. And then, of course, all the implications that come after, which is, for example, bank account or all the other aspects that follow once you have your visa license.
Bank account,
your corporate license, sorry.
Yeah, which could be one of the most problematic things, the bank account, unfortunately. But we of course, we are very helpful, and we try at least to help the clients with that.
Okay. So I see it's quite fast and quite straightforward, apart from the bank account. Similar to here to the UK. Okay, well, so I think with this last question, we'll be wrapping up. I think we've answered all your questions. If you have any more questions, please send them just right now. Otherwise, we'll be finishing up. But you'll have their contact details, so they'll be more than happy to answer and keep the conversation after this session. Thank you again very much, Lorenzo, Luca, Tomas, for this expert insightful vision. And thank you all for attending. I hope you found it both interesting and useful. Later today, you'll receive the presentations the presentation that they have just shared with us, together with the recording of this session and also with the contact email. So, as I just mentioned, I'll hand over to Marta, and then I'll conclude the session. Thank you very much.
I think nothing more to add. Thank you so much, the three of you, and also Miriam. We are willing to collaborate more, and very interesting session. Very, the information here that we are receiving lots of emails every day almost with this kind of questions. So I think it's really, really interesting. Thank you so much.
Thank you, Marta. So before finishing up, as you may know, at the Spanish Chamber, we have a very active events calendar and many interesting upcoming sessions. For those who are following us today, based in London, we are organizing a very important charity run for the Chris Cancer Foundation, one of the Chamber's patrons. It is on the 25th June at Battersea Park, and we encourage members and non-members to join. Our goal is to raise £10,000 this year that will go directly to the charity. You can find more information on our website. You'll find the link at the email that you'll receive later on the day, and hopefully I can see you there at the race, because this is for a very important cause and very close to our hearts. Nothing else. Thank you all once again and enjoy the rest of your day. Thank you very much. Bye.
Thanks
you.
again to everyone.
Thank you.
Thank you very
Bye.
much.
Bye.
Bye.
Bye.